Alrighty, good morning again, everyone. Hope you're doing super. Gold has been trading very well. Right, so hope you've been doing super. Hope you've been trading well. In today's session, we'll talk about what happened with the Aussie dollar, the RBA cap rates on hold. We'll talk more about that. And also, we'll look at all the other currency pairs on possible trade setups. But first, okay, here we are. Good morning, Diana. How you doing? Hey, Ju Marinas. Hope you're doing well. Hey, Erwin. Good morning. Good to see you again. All right. So not a lot, actually. Actually, not a lot to talk about in terms of fundamentals, because what we just had at 12:30 p.m. GMT plus 8 today was the RBA cash rate, interest rate decision, where they kept rates on hold at 4.35%. Oh, wait, before all that, forgot the drill. Do remember, click like and subscribe if you haven't already. If you have any questions at any point in time, please feel free to put it into the chat and let me know. Um, and if you're on the session, do drop a message and say hi. Let me know where you're joining us from. Okay, forgot about that. I was too eager to rush into this to get into the meaty parts of this session. So again, Aussie dollar um, cash rate, interest rate decision from the RBA, kept rates on hold at 4.35%. No change there. In terms of the rate statement, what we did see on the rate statement was not a lot to really focus on. The cap rates on hold. Inflation has fallen. High interest rates has been working to bring demand down and supply towards balance. Inflation is still above, some way above the midpoint of 2 to 3% of their target range, right? And that's why they've kept rates on hold at 4.35%. Like we were saying, there are CPI numbers coming out. In terms of inflation, it's been 3.9% over the year to the June quarter. 3.9, not at their 2 to 3% target. And because of that, they have decided to keep rates on hold, in addition to forecasts published in August for underlying inflation to get to that point in 2025 and approach the midpoint by 2026. So it looks like, unfortunately, it looks like the Aussie CPI is taking a lot longer to get down towards its target level. The US is there already. Most of the other major economies are there. I was trying to find out more about why it's taking so long or taking that much longer for the Aussie CPI to get to that point. Haven't found it yet, but once I do, I'll share it with you guys. Persistent inflation and ongoing strength in the labor markets, right? Then all that about uncertainty in the global outlook and economy, returning inflation to target is still the priority, and that's why they've kept rates on hold. So no big surprises there. What we did see on the Aussie dollar, it pretty much moved as planned. We had it below, this point here from yesterday, but just before the news, I was telling you guys on Discord. If you saw that, let me know. That as the Aussie, this was just before the news. I was thinking that I posted it here. As it was pushing up, I was thinking, hey, if the Aussie does continue to push up, we could test that resistance and look to sell down from that point. It didn't go as high as I expected, but it did start pushing down after the news. right? So at 1 o'clock GMT plus 8, it started pushing back down now towards this resistance turned support level at 6820. So that's what happened with the Aussie interest rate for today. Looking at the headliners, RBA Governor Bullock saying recent data has not materially affected policy outlook. The board did discuss whether to change policy messaging, but does not see a rate cut in the near term. Right? Does not see a rate cut in the near term, but um, we did see the Aussie dollar push back down because of the uncertainty that they were highlighting. Then, in addition to that, at 1:05 odd time, 1:05 p.m., BOJ Governor Ueda spoke, like we were saying, at the business leaders meeting in Osaka. I would love to have been there, not so much for the meeting, but for traveling in Osaka. But what he did say at that point was that he aimed to increase interest rates upon meeting economic forecast. Aims to increase interest rate upon meeting economic forecasts. Central bank to adjust easing level if outlook materializes, and appropriate to raise rates if trend inflation heightened in line with forecast. Um, these are all the headliners from the meeting. Real interest rate remains deeply negative, stimulating economy and working to push up prices. But it sounds very hawkish, right? It sounds very hawkish from Governor Ueda talking about increasing rates when forecasts are met, adjusting easing levels, adjusting rates if trend inflation heightens. All that sounds very hawkish, but what happened? Look at the look at the yen. Right, this was at 1 when he started talking. It set at 143.83 and pushed up over the last 3 hours on the third hour, pushing to the upside despite his relatively hawkish view talking about hiking rates. Right? It's pushed up about um, 80 pips. It pushed up about 80 pips over the last 3 hours to the upside. Why? Right? It's more because of what happened here on the dollar over the last 2 hours. You saw it pushing to the upside. That's one reason. Another thought is that as much as he said that they were going to hike rates or they're ready to hike rates, it's all on condition that they meet their economic forecast. If the outlook materializes, if the trend inflation heightened in line with forecast. So it's like saying, I'll do this, only if the conditions are met, and the conditions are not there yet. So that's why we're seeing markets probably taking that view for a bit of a I can't think of the word now. Suddenly, a bit of a disbelief, right? Lack of a better word, a bit of a disbelief that hey, yes, you could do that, but right now not ready. And that's why we see the yen weakened, also being propped up slightly because of the dollar pushing slightly to the upside. So that's what we saw. The last two news that came out: Aussie interest rate, Governor Ueda speaking. Through today, not much else to worry about. At 10 p.m., we do have consumer confidence numbers to be released for the US. It was 103.3. It's expected 103.9. So again, not expecting a big surprise there. But let's scroll back to yesterday. And today, Forex Factory, I was thought jinxed it. Forex Factory seems to be working a lot better today. Um, we did see the whole bunch of PMI numbers. It all came out red, right? I was thinking that, and this was after our session, right? This was the end of our session, right? I saw the Euro PMI numbers come out, and I was just thinking like, doesn't look like great news, right? And then the UK numbers come out, and it's slowing down. Manufacturing PMI went from a 52.5 to a 51.5, still in an expansionary phase, but slowing down. Services PMI 50 was 53.3, got revised slightly upwards to 53.7, but got released at 52.8. Again, expansionary but slowing down. And more importantly, when you look at the US manufacturing PMI, went from a 47.9 to a 47, and services PMI from a 55.7 to 55.4. Right? So slowdowns right across the board for the PMI, which is the Purchasing Managers Index. You'll see that at 9:45 when that was released, what we did see on the dollar was that it pushed up, right, as we were talking yesterday, and then it came right back down at 9, was right there, right? It continued, or rather it reinforced that push to the downside towards 100.75 before coming back up again. That trend line that we were talking about from yesterday held the dollar index. It pushed up, held the dollar index, and then pushed right back down. So somewhat or very closely as what we had planned, right? As I saw that pushing up towards that trend line and that area there. You'll see also that 61.8 level tested, touched that point and pushed right back down. Now again, this afternoon pushed up again, tried that trend line, and then looking like it's pushing back down again. So that was what happened with the dollar index yesterday. We'll talk about it coming up. News through to tomorrow, 1 a.m. Governor McCallum speaking from the BOC fireside chat at the Institute of International Finance and Canadian Bankers Association. That's a long name. I don't think it's going to do too much for that one. But 9:30 a.m. GMT plus 8 tomorrow, we do have the Aussie CPI year on year to be released. And it looks like the RBA, I hope they knew about this, right? Or maybe they have a bit of a insight into what the CPI number might be, because year on year it looks like it's going to go from a 3.5 to a 2.7 based on forecast. So maybe this was, as much as they didn't do anything to raise and they're not considering, when they say that it's not in the near term, this might bring about some interesting numbers. Could be that it's not going to be 2.7, could be a bit higher. And that's why the RBA might have got an insight and say, no, we'll wait and see what happens. So we'll look out for that tomorrow, 9:30 a.m. GMT plus 8 for the Aussie CPI. And then through to Thursday, we have the Swiss National Bank with their interest rate decision, 25 basis point rate cut expected. On Thursday, GDP for the US, Chair Powell speaking, and then GDP for the Canadians on Friday, and the core PCE price index for the US on Friday night. Okay, so with all that said, okay, let's look at the dollar index. But before all that, a good morning, Linley. How you doing? Hope you're doing well. Hey, Stefan. Hey, Christina. Good morning. Hope you're all doing great. Now, you're looking at the dollar index here. Saw that it tested 61.8. We saw that it rejected and pushed down. That's worked out well. Take that away. You should also notice that today, apart from the consumer confidence number, we don't have much news for the US. So when I look at this, what I'm thinking is that the trend line is still going to hold. Right? The trend line is still going to maintain that downside for the dollar index. You would also see that as much as we had that bearish trend line, we also have, if you just took the tails of that, we have that holding prices slightly to the upside. Alternatively, if you looked at that on the dollar, we could see some downside, especially if it breaks below 100.80, right? So now looking at this on the dollar, today is the 24th of September. We're looking at the dollar index. Currently just below 101. Just below 101, needs to break down. Okay. Currently just below 101, needs to break 100.80 for more downside to 100.60 support level. Okay. So what I mean by that is I see it bouncing at this or coming down slightly and then breaking lower. But I don't see it, I think 100.85 would be good. Okay. I see it coming down to this point and possibly testing again and then doing that. Okay. Change that to 100.85 to break down to that 100.60 level. I missed out on the comments on LinkedIn. Anyone watching on LinkedIn, those watching on LinkedIn, I missed out one comment there from yesterday that they were thinking that the dollar index could trade down to the 100 level, right? Could trade down to the 100 level. I do think that that's possible, but I don't think it's going to happen soon. Reason being, I don't see any major news at this point that could push it down that much or to cause it to break this support level that has held and has held quite strongly, relatively strongly over the last month, pretty much coming to a month now, right? This was on the 26th of August, we're on the 24th now. It seems like September just zoomed right by, right? So that's, I think that yes, it could break, but not immediately, not at this point. I think the lowest would be at 100.50, but I'm looking at that support level first. Okay. All right, cool. I like that. Then looking at the Kiwi dollar, right? So looking at the Kiwi dollar here, it didn't break down, so we can take that one away. Right? We didn't see that dollar strength. We saw it test the trend line. We saw it push back down. Now we're anticipating some slight downside on the dollar. So I think that it didn't come down into this area, but it pushed down a little bit before pushing back up. An interesting thing is looking at how much the Aussie dollar is pushing down. The Kiwi dollar is not doing too much, right? The Kiwi dollar is not doing too much at this point. I'm extending this fib level up. We'll catch this point here. Don't need that. We have this levels here. Okay, I am still thinking now that the Kiwi, I don't even need this actually. Keep that there. Hang on, let me check. Do that, do that, that makes sense, okay. Okay, I am still thinking that the Kiwi dollar, because we're looking at the dollar maybe pushing slightly to the downside, I want to see it push up towards this 0.63 resistance level that we saw it test and reject on the 29th of August. Right? Test and reject at that point. And look what happened. It tested and came right back down. Right? Tested and came right back down towards that 61.8 level. So with that, what I'm looking, I don't need that. What I'm looking at from here is that the Kiwi dollar, essentially looking for it to push up towards 0.63 and then could push back down. I don't need this point. What's that dotted line here? I don't need that. Take that away. I think it could push up, test, bounce, and go back up again. Okay. So looking at this. Okay. So Kiwi dollar looking for a reaction at 0.63. I would be looking for possible sell towards the downside. No, okay. Don't do anything on the Kiwi. It's interesting, or it'd be nice to see it test and then come back down this way, right? But it could also break to the upside from this point. So I would say wait, look for reaction at 0.63. Because if I did 61, it could test and reject like what it did here and push right back down. It test and reject and push right back down here as well. So you do have time on this, right? You don't have to rush into this. Kiwi dollar, we want to look for reaction at resistance, round number resistance of 0.63. Okay. Then onto the Aussie dollar. Channel still working well. I'll take that one away. So that didn't trigger even the updated one, right? Take that away, push that up. So it came right down to 23.6 and also that support area here and also the bottom of that channel. Take those away for now. Okay. So we can see that channel. The channel is still valid, right? The channel is still valid. It's come back down to the support. Now at this point, naturally, as we look for the dollar to possibly push back down, we're looking at the Kiwi to bounce to continue trading higher. I'm actually thinking, what if the dollar has a rebound again, like what we saw a bit from yesterday? I don't need that for now. Now, if this breaks, if it breaks that support at 6820 and also that 23.6 level, I'm thinking that it could come down to this point here. Again, massively counter trend. So you're looking at 6810, stop loss 20, take profit 60 to the downside. Hey Angel Case, how are you doing? Good morning. 6810, 20 to 60, 0.6810, stop loss 20, take profit 60 to the downside on the Aussie dollar. Okay. Towards that 50% retracement level. Okay, that makes sense. Now, with that, we look at the pound dollar. Look at what happened at the pound dollar. Right? It came down, it bounced off that 23.6 level. It didn't break. Our alternate view was that it bounced off the trend line and pushed right up, and it's done that exactly. Right? I'll take away some of these levels we don't need for now. Take this point up here. Don't quite need that. I'll keep that there. I don't quite need that. I'll keep that there as well. Okay, I think that one is going to be a 61.8 there. Okay. So now looking at this pound dollar consolidating in this area, right? We've seen that push up as planned. Yesterday we were saying to sell, didn't break that area, so we didn't trigger that trade. Now it's consolidating. And if you look at the Bollinger, it's well narrowing, right? Not narrowing, it's squeezing together. It's coming together. So when it comes together, it's likely to sit in that consolidation for a little bit. But what you also see here is big upward trend, right? Big upward trend. And as it consolidates, so what you'll be looking for, that, right? Push up, consolidate in a rectangle, look for it to break out of this rectangle, possibly back up. So it might come back down a little bit, and then I'll look for it to break up on dollar weakness. You're looking at 1.3380. Stop loss, you'll be looking at 30 pips. Take profit, you'll be looking at 60 to the upside. I'm just thinking whether we can go nearer sooner. No, we're really high actually. We're at that point. Break to the upside. I like that. Okay, that's fine. What I actually think, so there's two things I think could happen here. Two things that I think could happen here on the pound dollar is it continues in this consolidation, you look for it to break to the upside, or alternatively, the dollar bounces back a little bit before coming back down, then we'll see the pound dollar trade down, test the support, do that, and then push back up. Right? So there's that two views. I think that that's the more likely scenario at 1.3380, 30 to 60 to the upside. So we're looking to buy at 1.3380, stop loss 30, take profit 60 to the upside. Okay. Sit there, do that. Or it bounces around here and breaks up. Okay, I'm happy with that. Then on to the euro dollar. Right, euro dollar, there was two thoughts. If it breaks down, again, didn't break down. So yesterday we were quite, it looks like it was all breaking the trend line to the downside. The trend line basically held. All the trend lines that we were identifying yesterday basically held, and we saw price bounce off the trend line, off or near the trend line. All right, so didn't break lower, and we were saying this for the euro dollar to buy from 1.1090. Test and bounce. You could have caught that, but like for me, I was super focused on the trading gold or scalping gold, trading gold to the upside. So I didn't really look at the euro. Now at this point, take that away first. Now at this point, what I'm looking at is it's pushing back up. Take that one away. And that trend line is still there. That all makes sense. It's still pushing back up again. I want to look for more upside, but I'm just thinking of where would be a good level to get in. So 61 was there. So keep that one there. That makes sense. That's good. I'm just thinking whether if it breaks above this point, you could trade it up further, following with that. Right, you could look to get in here. For example, you could be looking at 1.1130. Your stop loss could be 30 pips. Your take profit would be 45 to the upside or 70 to the upside. Right, that way, which can make sense. 1.1130 to the upside can make sense, especially if the dollar continues to weaken. What I'm thinking is that whether we'll wait for it to break, so 1.1150, stop loss will be tighter, no more than 15. And then your take profit, you have 30 or 50 to the upside, which is up there. Right? So I feel like if you got in here, it could do that and then push up again, which could be quite interesting if it comes back down to test that trend line. So I'll look for it. Wouldn't do anything yet. Look for it to break 1.1150, 15 to 50 to the upside. 1.1150, stop loss 15, take profit 50 to the upside. Okay, that's good. I like that. Break up. Okay, I'm happy with that. Then on to the US yen. In the middle of scalping and trading gold, I did have a quick trade to the upside on yen as I saw it pushing up. Didn't trigger down, so take that away. It's bounced off that 23.6 level. Is just tested 61.8 from the longer term, and it's holding. What I'm going to suggest now might be a little bit more speculative. right, might be a little bit more speculative, because what I'm seeing here on the yen is that it seems, right, it seems to have found a little bit of a top. It tested here 144.45, pushed back down, tested 144.45, pushed back down, testing 144.50, doesn't seem like it that much. Okay? And if I look at this trend line, you look at that, and that, it kind of still makes sense. So what I'm looking for would be a possible selling opportunity, right? Dollar weakness, trying to push it back down. If that happens, that could push this back down. Then you'll be looking for this to break below 144. You'll be looking at 143.70. Stop loss would be just above 144, so about 50 pips. A take profit, I don't think it's gonna go. I don't think it's gonna go 300 to the downside. Those days of crazy yen moves has now transitioned to crazy gold moves. So I don't think we're gonna see that huge a move. I think you can see that down to that 50% level. So what I'm basically looking for is a test, break, and then down that way. Okay, so very speculative here as it sits right across and tries to resist that upside 143.70. Where am I? 143.70. Stop loss 50. Take profit 155 to the downside. Yep. Okay, cool. By the way, all good so far. You guys are a little bit quiet today, so let me know if it's all good, if it's all working well, if it all makes sense. Put it into the chat and let me know. Okay. Then with that, Euro Yen didn't trade lower, pushing up. Thanks for that, Jumarinas. Pushing up, holding 38.2, holding 23, broken. So we take that one away. Remember again, euro dollar, we're thinking there's going to be more upside. US yen could sit right there, could push up. I'm not ruling out a push to the upside. I'm just looking for that breakdown. So euro yen could trade up. You look for it to first break 161, then 161.25. What you see is that if it trades higher than 161.50, stop loss at 50. Take profit again. I don't think 200 is going to be reasonable. That point there, right? So you're looking at that 120 to the upside. Break up, push. Yeah. Okay, so that's what I want. 161.40, 161.50, 50 pip stop. No, I can go a little bit earlier. I can go a little bit earlier on this. 161.40, 40 pip stop, 130 to the upside. Okay, so looking for continuation. But remember, it resisted there, so you want it to break above before you look for that upside move. Euro yen countering US yen. Yes. Again, remember this is the speculative speculative setup, right? Wouldn't be surprised if it pushes up this way. If it breaks and pushes up, I would like to see that breakdown. I'll be happy to sell it down. But anticipating that the euro dollar could push up, if the euro dollar pushes up, we could see this drag up. So This is the high risk, highly speculative move. This is the if the euro dollar pulls up, right? Because if the US yen does drop, I would be more tempted to sell the US yen down rather than to try and sell the euro yen down, just highlighting that there were a couple of levels that it bounced off from, right? So if I drag that up, you wanted to break that level, then break that support before you want to sell. So I'll be more keen on the US yen. All right. No worries, Naren. Diana says all good, but not sure with direction still yet. Yes, looking to buy euro yen up, but from 160.25. Wait, 160.25. Okay. So yeah, Diana's looking for it to retrace down, bounce off the trend line, and then push back up. Makes sense as well. Okay. Now on to pound yen. Almost worked perfectly. Didn't trade low enough to bounce. It came down. Didn't break that trend line, but it did bounce off that 23.6 level to push up. Why it pushed up? Firstly, yen pushed up. Secondly, pound dollar pushing up. Hence, pound yen pushing up. Okay. Now, when you look at this, I'll take that one away. Pound dollar sitting in that range could have a little bit of a downside before bouncing, possibly bouncing. US yen possibly sitting, maybe some push back down. What I'm looking at, look, pound yen, one time here, break. Wait, hang on a second. One time here, and then it pushed down. Two times, and then it pushed down. What do you think is going to happen on the third time? What do you think is going to happen on the third time? Not that it's a certainty, it's never, no guarantees, but we would be looking for that to break and then, well, to bounce, to reject, and then push back down again. All right? What you do have here, however, is a bit more waiting to do. I know I deleted that, but I'm putting it back in again. A bit more waiting to do. You wanted to, I wouldn't rush into this because we want to see what happens at a pound, right? Pound dollar looks like there's some upside to go. US yen is a bit undecided. Everything seems to be a little bit wait and see at this point. So now on the pound yen, if it does this, let me show you. Um, if it does this, and then maybe that, that, and then we look for it to break down. Okay, so I don't even need that point. The safer option would be to think of that below 191. Right, below 191, you look to sell down. You got a tight stop. You would have that move to the downside. Alternatively, you look for it to bounce around there, reject that level, the resistance. You'd be looking at 192.50. You put it just above 193, which is about 60 pips. Then you have your first level here at this point, which is just about that between these two levels, but I'm looking at this point here. So that's what I'll be looking for on the pound yen. Right? If it breaks right down, then look for it to break that 23 and then trade it down. But that's what I'll be looking for on the pound yen for now. Okay. More downtrend unless if it breaks that level and hold. So good to buy. Yep. That's that one. And that one. Okay. Then onto, didn't do that much. Then onto the US Swiss franc, right? US Swiss franc didn't push all the way up. You know, yesterday we were right at this point here. Instead of pushing up, it just pushed back down again because the dollar pushed back down. So it came back down. It's sitting there now at this point. Take that away. I know I have that low there. I am also looking at that. So that didn't trigger. Take that away. Expecting some downside on the dollar index. What you would be looking for be that 38.2 level, right? Even if I took that one there to break down, then you'd be looking at 8460, stop loss 25. Not great. Not great. I don't want to factor in the tail. I would say more that point there, 50. But it's not something I'll be the most keen on. Okay, 8460. Stop loss 25, take profit 50 to the downside. And then onto the US CAD, right? It was in that area. It finally broke down again. Dollar broke down, so it broke out of that area. It's still sitting right. Look at how tight and right across that TSR MACD is. So it's sitting right there, still pushing lower, could still push lower. No CAD news, no major CAD news. Yep. Now looking at this, then I still wouldn't do. So yesterday I wouldn't do anything because it's got that range. Today it's right in the middle. Look, it has about 80 pips to the upside. It has about 80 pips to the downside, or maybe just a little bit less. It's got like 70 pips to the downside. So it's right in the middle of that support and resistance level. You could try and trade it out. I wouldn't advise that. It's just not enough space to look for a trigger and then your stop loss and your take profit levels. I don't think it's worth that. US CAD is do nothing because it is in the middle of support slash resistance level. There we go. Dollar, look, dollar in the last or the current hour showing some of the downside move, but CAD sitting right across. So it's just been sitting flat. So let it sit flat, look for it possibly to come down. Well, firstly, it's going to sit flat, possibly come down, and then we look for that bounce back up. More, you're most welcome there, Diana. Okay, then on to gold. That look at gold, right? So if you haven't already, then join us on Discord. Get onto I think the links are there, or if not, join the mailing list. I'll send you the links as well. We've been talking on and on and on. I've been on and on and on, updating as gold moves up. I had a trade that I was targeting 2640. I closed out a little bit earlier than that, but it got right up to 2640, touched 2640, and came right down. Right, came right down. I closed out, I think, just an hour before that. went up, touch, and it came back down. Half thinking that gold, when it pushed down, I was on the 15-minute time frame. I was on all the smaller time frames, thinking that it could push lower, that it was time for a good correction back down, but it didn't happen. We still see this move up. That resistance up, drag it right up to 2640. It's still dragging higher. So far, fortunately, none of you have asked me when is gold going to reverse, because I have no idea. Like I've been saying yesterday and again today, and pretty much for a couple of sessions, um, I'm looking for it to. I'm looking for a reason, right? Even if it does push back down, right? I don't see why or how, that it could sustain. So I'm actually still looking for a reason that it would push lower. Fundamental or a big technical reason. Diana said, I did my analysis on gold and my level entry was 2620 to 2630. It would have worked out very nicely, but hesitated to trade, but worked out nicely, just testing. Fantastic. That's a great test. That's a great test. But, like I always say, I don't always say, but I think about it, is that you want to test, when you're testing a strategy, it works. Also make sure to test in a alternate scenario as well, in a reverse scenario, right? But for now, it looks like we're still going to see more upside on gold. It's struggling to break lower. The TSRI MACD since yesterday has been telling me that we could sell it down, but it's still pushing up. So I wouldn't sell it yet. On a daily time frame, it's just tracking right along that Bollinger line. Right, it's just tracking right along that Bollinger line. I think that it's still going to sit there. It's still going to push up a little bit higher. It might get to 2650 before we see any more significant or possibility of a correction back down. But for now, nothing at all. Right? So what I'm looking at for gold, right? Currently retracing, didn't get to 2600, bounced off earlier. Gold, we're still looking for upside to continue. You're basically looking to buy dips up to 2650. Okay, possibility to go lower to 2600. That was what I was just during that 1 o'clock candle. As it was pushing down, it got to 26. No, where was it? Yeah, it got to 26.25. I thought it got a bit lower. Where was it? 2 o'clock, 2 o'clock. Yeah, I got to 26.24, 26.25. I thought that was going to be the good time where we could see it come down to 2600, and it would make a lot more sense, but it didn't, right? But it didn't. So I'm thinking that it might hold, especially if that level holds together with that 23.6 level. We're going to see it push back up towards 2650, right? So if this level holds, we could see it push up towards 2650. Daily time frame to fair value. Yeah, it just hasn't been, even that didn't come down that much. Or it came down, but not a lot, and then it pushed right back up again. So it could. I would like to see 2600. I would like to buy again at 2600. At this point, it's just as it gets to that super high level, I'm just scalping it um, to the upside. Okay. So with all that said, please remember, trade well, trade safe. I've I've did some videos and shorts and all that. Do check that out. Um, and if you haven't already, the link for the mailing list, right, is there or is here. I'll do make sure you join the mailing list. A scalping video is coming. It's coming, so stay tuned for that. It will only be on the elite navigator site, so you'll see it when it comes out, Diana. How do I know what is the appropriate lot size to make? Because I always end up blowing my account. Do you have any advice? Kaiser Wilhelm. Appropriate lot size. I would say that the best best calculation is for every 10,000. I'll do the big number first, right? For every $10,000, your maximum exposure should be one lot. Maximum exposure at any point in time. So if you tend to enter many trades and you size it right down, if you tend to have one trade, I still wouldn't do one lot. I'll do maybe a 0.5, right? Just so that you have the bit of a buffer there. So yes, Diana said 1%, but sometimes when you think of the 1% and you're sitting there calculating 1%, and then you're trying to adjust your stop loss and your levels. So you need to know what is your average stop loss size, and then based on that, you start thinking about what's an appropriate lot size, but your maximum exposure on a 10K account shouldn't be more than one standard lot. All right. Hope that makes sense. Okay. Yeah, it's supposed to be 1%, but sometimes when you do 1%, then you start calculating, and by the time you calculate and you start adjusting levels, and price has moved on already. And then for me, I don't like doing different trade sizing for every trade. I like to keep every trade at the same size, just because I treat every trade the same. Because if one trade suddenly is at a one lot, and then the other trade is suddenly at 5 lots, then you go, the 5 lot one is more valuable than the one lot. It doesn't make sense. So I try and keep it all at the same sizes. You're most welcome there, Kaiser. Kaiser. If it doesn't hold, then Lingopedia is asking about gold. If it doesn't hold, then we might see it come down to 2600, but I'll still be looking for it to get 2600 and then do that. Still not looking for that breakdown, especially with the downside anticipated for the dollar, especially with the escalation in the conflict between Israel or in Israel and the region. So all that put together, it's just a mixing pot for gold to trade a little bit higher, continue trading higher. I would love to see 2600 and buy it up. That would be the most perfect. But for now, if it pushes up, I would scalp it up. But I'm looking for that correction back down or retracement back down. Alrighty. So with that said, please trade well, trade safe. I will see you all tomorrow. In the meantime, take care. Bye bye.